I've got a question this week on inside days. I'm going to talk a little bit about them, why they happen, what you should be doing, how you should trade an inside day. We're going to do a little bit on this. Now, I'm sure most people know what an inside day is. If you don't, an inside day is nice and simple. The entire day's range is contained within the previous day's range, and that's often referred to as the mother candle. If you look at, or you've spent any time reading about Japanese candlesticks, the mother candle represents, and the reference is to an inside day being a harami candle, which means pregnant, and so the inside day is seen as the baby within the mother candle. That's where the name comes from. Well, that's where the mother candle reference comes from. So you've got this one day's range that is entirely within the previous day's range. You can have this on a shorter time frame as well. You could get a 15-minute candle inside a previous candle as well. So it's not just purely a daily thing, but the daily ones are the ones that people mainly focus on. Now, what this is telling you is that basically positions have been compressed. That's the essence of the inside day, that once you've created a range, 50 ticks wide, the next day just trades within that range. Essentially, people are comfortable with trade there. Positions are being built up. People are getting long, people are getting short for the next stage of the move. And that's how the inside day gets created. And that's the important bit. Because what that's telling you is you now have more and more positions in the same area. So you had the first day, the mother candle, and then after that you get another day within that, and that's a continuation of this building of position. Now, some people there are wrong. And that's where the move comes. What you're looking for then is, as the inside day breaks, either the longs or the shorts, depending upon which way it breaks, are wrong. And that's going to start forcing people out. And that's what you're looking for, essentially. So what this leads to is a pretty basic trade strategy. A simple basic trade strategy is you wait for it to get to the extreme of the inside day and execute in that direction. So you buy it at the high of the inside day, the following day obviously, and you sell it at the low. So you can't trade an inside day before the inside day is formed. That's very important. I often hear people talk about, oh, well, it's an inside day. It's not an inside day if you're just trading within the range of yesterday. You're potentially going to have an inside day, but you don't know it's an inside day. So the trade comes the day after the inside day, just to clear that up. And you then use the range of the inside day as your breakout points, either long or short, at the high or at the low. Now, what's very important about an inside day as well is adding context to it. And I always say this with any kind of setup. If you just go with a very basic strategy, you're going to execute this every time. And that can be seen as good and consistent, from a mechanical point of view. Great. You're consistent in your execution. At every inside day, you wait for it to get to whichever extreme and you execute. But what you'll need to try and do, and this is what you should do with any strategy, any setup you have, dig a bit deeper. Dig a bit deeper into when do you actually want to take that trade on, because there's going to be many instances where you look at it and with experience, you'll look at it and think that doesn't look good, and what you try to do then is define why it doesn't look good. So that's your sort of next step. And with any setup strategy you have, always take it a step further and try and establish when it's going to work best, when it's not going to work so well. And part of that comes from how it's been created. So I'll talk you through that in terms of context in a moment. And what really you need to ask yourself is, that inside day, is it formed within established value? So are we still trading in the same area that we were trading yesterday, and the majority of the inside day is overlapping the value area of the previous day? So I use a profile for this. Or is the inside day formed in order to establish value? So there's a distinction there in terms of, are you continuing to build value and build position where you previously were? Or are you establishing value, so building value in a new area? In which case, the inside day is perhaps slightly more predictable in terms of predicting the inside day, but less predictable in the way that you're going to develop from that point, because it's not so much of a compression of positions and more a progression of a certain movement. I'll show you an example and you'll understand what I mean a little bit clearer. Right, so let's go and look at a typical example, and these are the ones that you generally are going to want to be interested in. We've seen a couple of these recently in Bund. Bunds quieten down. I'm using this as an example because you can stretch the profiles out enough so you can see them a bit better rather than just compressed blocks, if I say did gold or something like that. So what you have with the Bund, there's two inside days here, over here on the 8th and on Friday the 15th, so last week. Both of them on a Friday, incidentally, and I wouldn't read massively into that, but perhaps something worth thinking about. Are you more inclined to get an inside day on a Friday, and does that then lead to a more exaggerated move on a Monday? Something to go back and research. Always look at more, dig deeper into your information. If it is down to a day, is that day significant? And if it is, you can then start using that to extrapolate out and using that to build conviction and confidence that the inside day is going to go when it comes on a Monday following a quiet low volume Friday, for example. So what we've got here is two inside days, both of which you see that the majority of the range of the day is entirely within the value area of the previous day. So what that's suggesting is that everyone who's happy trading around here on the Thursday and on the Wednesday is still happy on Friday. So this is building positions up, and I'll show you this in a moment with an hourly chart as well as a profile and a 5 minute. So all this is just building positions in the same area, essentially somewhere between around about 177.50 and 177.20. So positions getting built up. What we then get, and this is the important thing, this is what you're looking for with the inside day break. You're looking for the acceleration on the break. That's what you're interested in. Typically, it's going to leave you a bit of low volume, and quite often you finish with this fat bottom. Reason for that, it's a liquidation of positions initially. So that liquidation of position forces people out, that creates the drop, and then you get acceptance lower down. You see that on both of these days here. Doesn't have to always be the case, but the main bit that you're interested in is that acceleration on the break, and that's so important. If you don't get that, it's not going to be a break that's very playable. So you're always looking for this surge in order flow as you get to that breakout point. Pick up in volume, dropping or increasing delta depending upon direction, because what's happening is people are getting out of position, and that's causing this more aggressive selling or more aggressive buying. So that's what you're looking for, but that gives you a little sense as to sort of how you want to view it in terms of value being accepted within previous value. So it's maintaining people's willingness or acceptance to trade in those areas, and it's the change that creates the move. So let's have a little look at this on a shorter time frame. This is the first one, so the one on the left hand side, and this comes out of 3 days of consolidation. So you can see that this was on the 8th of January, 3 days of consolidation in this tight range, and what you're then looking for is the break. Now the break actually comes at 20, so that comes just down here, and you can see there's a low. This was from the previous day, so there's your low on the current day. And what you've always got to think about when you get these breaks is you've got to be very aware of where your risk is and how the break happens. So again, the strategy is not as basic as wait for it to get to the edge, all right, it's got to 20, bang, sell, and then just sit back and let it go. You've got to judge your risk on this as well. So you've got to think about, well, where can you put your risk on this? Where can you accept it pulling back? Because quite often This is something I've noticed over quite a long period of time. Inside days will break. You'll get the initial sell as people rush to sell on the break of the inside day because everyone knows this strategy. And then you get this rotation back up. Potentially people profit taking when it doesn't keep going. People buying, playing for the false break without knowing that it is a false break. Whatever it is, you will often get this drag back up. So you need to assess your risk. Where is your risk on this trade? Now, I'd suggest realistically you're perhaps coming all the way back up here, back into value from the previous day. It seems a long way. You could use also the low of the current day, and yes, you get a little spike back inside, so that's likely to catch people out. But what the point is, however you want to judge your own risk, and that you can't just define it as a number of ticks or something that is absolute every time, but you need to find a way that you're going to define your risk. Once you've done that, then it's the case you play that break and you're looking for this continuation away from the zone. The fact that you've got 3 days worth of range here suggests that this is perhaps got a little bit more scope to break. The other thing to consider is, can you get in early? Whenever I see an inside day, what you want to think about is the crowded trade versus the easier trade. Now, everyone can see an inside day and everyone can see the point that it breaks. Therefore, the simple strategy, wait for it to break, sell it. That's going to be lots of people trying to do the same thing. Your ability to get filled is not great because you're competing for so many prices. And also, if it doesn't just drop out of the sky, people will start to run away, start to take their profit, meaning that you're at the mercy of these washes back as people profit take or even take losses having sold too low. So I'm always looking at inside days. Do you get something that develops to enable you to get in? Now, of course, you don't know what that might be, but say a little consolidation like this between 45 and 35, there's your chance potentially to get in. If you see volume increasing on a break of this range, you see that delta starting to drop that little bit quicker, all of a sudden you potentially got something. And this is then where you can play that break through 35, meaning you're short by the time it gets to the inside day. Now, whether it breaks or not, you're still going to be up on the day. Either it's going to break and fail and you end up coming out, or it breaks and goes and you're in 10 ticks, 15 ticks better off than the inside day. Same kind of story that we saw this week on Monday as well. Another very tight range and it very, very quiet market bund at the moment, particularly in European sessions, and we see this in the morning again. But what we end up here, this is another inside day, very much inside value. We test away from value and drop back in. So now you're looking, this is your value area, just here, you're looking for this move down through value, meaning that now you've got the chance of a break. And once again, you form a little range that then breaks with some volume, with a surge down in delta or a smash down in delta. That's the chance to get in. Now, like I say, you don't know where that's going to come from. It's very hard to just say, oh, well, I'm going to wait for this range to form here. You don't know. But what you're thinking is, right, as soon as I get a range form, as soon as I get a setup, it might be a flag, whatever it is, you can use that as your way to get in before the break. And you can then use the break to add on. And look, once again, you get this pullback. As long as you've assigned your risk, perhaps back inside yesterday's value, above that drop candle, particularly if you've got in as it takes out the lows of this previous range, that's still only around about 4 ticks of risk if you take it to the top of the candle. And then once more, you look to play it down to reference points. First reference, of course, is the mother candles, breaking the mother candle low. So that's going to be your first target. And then beyond there, any other reference points you have, depending upon the sort of volume of ferocity in the move. This wasn't the strongest. Drops quite quick, gets absorbed, delta turns very quickly, and we rotate back up. Right, finally then, I want to go and have a quick look at a more predictable inside day, but one that doesn't necessarily give you the greatest of inside day breaks. And these often come after very large range days. Large range days, you can expect an inside day or a consolidation. But because it's doing that in order to establish value in the area that it's in doesn't really suggest the same as an inside day where it's continuing to build position in the same area. So take for example here, huge drop, large area without value. So this looks like a zone to fill in. So we then get an inside day here, quite a wide ranging inside day. So it doesn't look like your typical inside day, which is nice and balanced looking, up into this zone, but note, doesn't break the range. Then you get another inside day within this one, which you can see values all the way down here. So this area needs filling out, but also this wider area needs filling out. So really, until you get beyond this larger box, and this is the adding of context, we don't have a great deal of direction in this. So whilst you're getting an inside day, essentially these 2 days are just serving the purpose of filling in and accepting value on this day. So it's kind of sort of a 3 days into one, if you will. And therefore, when you get the break, you don't get the sort of particularly directional break that you might be looking for. Similar on in oil that we saw at the beginning of last week as well. Stretched end of week, and then we end up just creating an inside day balancing this area out. We do get a directional break, and the break of these two highs, so the inside day high and the mother candle high, you do get the acceleration higher, but it doesn't really continue. Big pullback a few hours later and not much further for the rest of the day. So make sure you're thinking about context. If it's a predictable inside day, then you can play that. You can play for this area to fill in as opposed to necessarily waiting for the following day. And this is then the break of this small inside day here. Break comes, you get the acceleration, but you don't see any pickup in volume. Volume's low on the break. That's not a great sign that this is a sustainable move. And as you can see, we're still very much inside this area of low volume. So whilst you have the break, the mother candle doesn't get broken because the fact you're just moving down within the wider range. So context is so key in terms of how far it can go, whether that break is particularly significant, and how you might want to play it. Doesn't mean you can't play the break, but what it does suggest is that don't have huge expectations on this. Perhaps not even as far as the mother candle low. So important there, go back, and at any inside day that you're looking at, don't just go for the basic form of it. Yes, you might be able to spot an inside day, but look at how that's formed and what it's showing you. Is it a continued consolidation of value where you currently are, or is it a creation of value where you are on the back of no value being put there previous? Difference is positions being built up and their then subsequent movement away from the area. I'll leave you there though, guys, something to have a little think about in the coming days and weeks. I'm sure another inside day will pop up at some point soon. I'll perhaps talk about one on Monday if there is one there. I'll see you all later for the ECB. Until then, have a good morning or good afternoon's trading. See you then.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. so the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.